Okay, let's talk about Unisys. For a long time, let's be honest, this has been a stock that's lagged the market, kind of a legacy tech player, just trying to find its way. But then they dropped their Q2 2025 numbers, and wow, the whole story just flipped on its head. So let's get into it and figure out what is going on here. So check this out. This really sets the stage. On one hand, you've got the stock's performance over the last year, down a pretty painful 25%. But then look at the right side. The second those earnings hit the wire, the stock jumps 12%. That kind of whiplash doesn't just happen by accident. Something big had to have changed. And that's really the big question we're tackling today, isn't it? What on earth did Unisys report that got investors so excited all of a sudden? Well, it turns out it's not just one thing. We're going to break down the two key pillars of their strategy that really lit a fire under this stock. It always starts with the top line, right? Revenue. The company pulled in $483.3 million for the quarter. Now get this, the Wall Street consensus was only looking for about $445 million. That's not just a beat, that's an 8.7% beat, a massive surprise to the upside. And if that revenue number was impressive, the earnings number was just, frankly, it was a stunner. The street was expecting a loss of about 30 cents a share. Instead, Unisys delivered a profit of 19 cents. That is a 50-cent swing from expectations. That is the kind of number that makes everyone stop what they're doing and pay attention. So just to put it all in perspective, look at this table. Revenue wasn't just a little better. It was almost $40 million better. And on the bottom line, well, a projected loss turning into a solid profit speaks for itself. This wasn't a small beat. They absolutely crushed expectations. But the real question is, how'd they do it? And can they keep it up? All right, let's get into the why. A huge piece of the puzzle here has always been this giant, complicated pension liability hanging over the company. And the CEO, Mike Thompson, said it perfectly. The goal was to simplify the story by tackling that problem head-on. This wasn't just about making one quarter look good. It was about cleaning up the past to build a much clearer future. So how'd they pull it off? It was this really slick three-step move. First, they went out and raised $700 million in new debt that they don't have to worry about until 2031. Second, they used a big chunk of that cash to pay off some older debt that was coming due sooner. And third, and this is the real kicker, they took $250 million and pumped it right into the pension fund. And boom, the impact was immediate. With that one move, they slashed their global pension deficit from $750 million down to $500 million. By taking so much risk off the table, they've made their future cash flows way more predictable. And that's something investors absolutely love to see. Okay, but cleaning up the balance sheet, that was only half the story. The other half, and you could argue the more exciting half, is all about where Unisys is headed. They are getting super aggressive with investing in AI-powered efficiency and really leaning into their most profitable lines of business. And listen, this isn't just a bunch of buzzwords. Their AI strategy is getting real results. Take their Service Experience Accelerator. Think of it as an automated IT help desk. It went from automatically fixing 15% of issues to now fixing 40%. That is a huge leap in efficiency that drops right to the bottom line. And while they're building all this cool new stuff, their old school cash cow is still performing like a champ. Their enterprise computing solutions business, which is their high margin powerhouse, grew over 7%. This is the engine that's paying for the whole transformation, and it's absolutely firing on all cylinders. So what happens when you de-risk the pension, boost your efficiency with AI, and have your legacy business humming along? You get confidence. And management showed it. They felt so good about things that they went ahead and raised their full-year profitability forecast, bumping up their operating margin target. That's a huge signal to the market. And if you break it down, this better outlook is really coming from a mix of things. The biggest piece of the pie is that their high-margin license and support business is doing better than they thought, and that's on top of all those AI-driven efficiency gains we were just talking about. Okay, so that's the story of Q2, an absolutely incredible beat, driven by some smart financial moves and real progress on the operational side. But our job is always to look forward. So what does all this mean for the next quarter? So for Q3, we're actually calling for a bit of a mixed bag. On revenue, management sounded a little cautious, so we think they might come in just a hair below what Wall Street is hoping for. But, and this is a big but,
Because they've shown they can control costs so well, we're still predicting another beat on earnings per share. All that probably means the stock will trade sideways for a bit as the market basically holds its breath and waits to see if that big acceleration they've talked about for Q4 actually happens.
So putting it all together, we're kicking off our rating at market perform. Look, Unisys has made some brilliant moves. They've de-risked the company and are showing real signs of life in building a more profitable future. But the near-term challenges and macro headwinds are still very real. The turnaround story is incredibly compelling, but we think it's not quite a done deal just yet. And that really leaves us with the big question that every investor has to be thinking about. Was this the quarter? Was this the moment Unisys finally proved it could turn the ship around? Or was this just a really nice gust of wind from their legacy business, with the toughest parts of the journey still ahead? The next couple of quarters are going to tell us everything.
And as always, a reminder, this is not financial advice.